Taking a look at futures this morning, it looks like we're kicking off to a strong start on this Monday. And again, this is going to be the first full trading week for the month of May that we're going to get. Dow up 91, NASDAQ up 46, S&P up 14.5. Markets are still up year to date, but investors are a little worried about these weak profit outlooks and that could threaten the 2024 rally. I want to bring in Prochain Capital President David Tawl. David, good morning to you. So your reaction, because as we start to kind of wind down this reporting season, companies are telling us that the margins are getting a little squeezed.
No doubt. We're seeing the consumer under a considerable amount of pressure. Credit card delinquencies are considerably higher. We're seeing companies that I'd say are in the middle market of discretionary spending starting to go ahead and show considerable weakness. For instance, we're seeing liquidations of some chain stores like Route 21, Sam Ash, the 100-year-old musical instrument retailer, is closing its doors. 99-cents only stores is going out of business. And then we're seeing some, rescue financings at the Children's Place, Joann Fabrics, Express. And I expect that to go ahead and start to widen. We're going to start to see bigger names with more stores around the country start to go ahead and show some hurt. And as you said, the likes of Starbucks have been disappointing. And I think that we're going to see continued, we haven't seen all the retail earnings yet, we're going to see continued weakened guidance coming out of retail.
I think it's interesting that you're saying that because we're going to get March consumer credit and sentiment out this week. And then the Journal has this fascinating piece that came out over the weekend about consumers saying they're fed up with high food costs, but they're ditching big brands as a result of this. And here's what they write. They say restaurant chains and some food manufacturers are reporting sliding sales or slowing growth that they attribute to consumers' inability or refusal to pay these prices. And they say coffee drinkers are leaving Starbucks, Chips Ahoy cookies on the shelves a little bit longer, and that McDonald's, people are complaining that they're paying too much for McDonald's, they're going to eat at home. So this kind of bodes well with what you're saying about the earnings reports.
Yeah, absolutely. Another name that I forgot to mention was Red Lobster is also going through restructuring as well. We'll see how that goes ahead and turns out. But again, I don't think that this is going to be limited. Some of these companies have been weak for a long time, the ones that I mentioned. But I think that it is a wider problem. And as long as we don't see a relief rally in credit, where there is a real conviction that rates are going lower, substantially lower anytime soon, then we're going to go ahead and see these companies get pressed by their lenders for restructurings. And so therefore, the equity in these companies is going to go ahead and underperform considerably.
Chris, jump into comment on this, because Chris, you were mentioning this before the show got going this morning, that when you're looking at these earnings reports, that you're very concerned about what you're seeing.
Isn't we've seen so many companies the double beats, and we're still the stock's going down. We've seen this happen. Netflix, it happened too. Just this outlook, just as David talked about, this negative outlook is really making people nervous. And I think we're going to see real downward pressure in the third quarter of this year, just because of outlook, regardless of earnings.
And that's a question, David, about what you're going to do with your money, because what do we do with our portfolios right now? Because we've had, the year's been off to a great start, but the idea that we're going to get multiple rate cuts, that's fallen off the table. Maybe two is the possibility here, maybe one. How do you maneuver this?
So my belief has been for a while and continues to be that we will get one token rate cut towards the end of the year. And that's really for two reasons, because Jay Powell needs to make good on his word that we will get a rate cut this year, which he has mentioned at a point in time in the past. And the second thing is that it's necessary for Joe Biden to get elected. Joe Biden is in the business of doing anything he needs to in order to go ahead and buy votes, make the consumer feel good about this economy as best he can. And so therefore, we will get a rate cut to go ahead and have some sort of manufactured rally in equities going into the end of the year and going into election season. But that being said, in terms of what my strategy is, look, I think you're right that we're not in a good place vis-a-vis rates coming down. Yes, we saw hiring slowing. That was the best set of bad news, right? We're in a world right now that bad is good, right? So hiring is slowing, and so that means the economy should slow, and so therefore that should give the Fed enough ammo to go ahead and cut rates. But the truth of the matter is, that's just a masking that's going on. I think credit remains expensive. And so therefore, highly levered companies such as those in the Russell 2000 that are, necessarily not even EBITDA positive, that's where I'm short. In addition to, and I will continue to be heavily short commercial real estate through some ETFs.
Sure.
And then on the upside, to the extent that we have a rally, I think tech is the best place to be. Certainly some tech is better than others. I took the opportunity this past week when Apple rallied on the basis of a buyback, even though while Berkshire Hathaway went ahead and pulled back on their Apple stake and sold a bunch of their Apple stock. I took an opportunity to go ahead and sell out of our Apple position because I don't believe that there's much great things on the horizon. The only thing we've got coming forward is really some tablet or iPad, announcement that's coming out. But at the end of the day, the phone cycle is not as robust as Apple had desired. I'm more into things like Microsoft, Amazon. I think those stocks are a bit undervalued, especially if we get a rally in tech.
David, before you go, just really quick, I understand that your daughter is going to Penn. Your son is serving in the IDF. First off, we're thinking about your children and all the kids that are out there, in particular on these college campuses. How's your daughter doing right now?
She's a resilient one, I must say, and she's an incredibly hard worker, and she's making it through finals. I think as the majority of students are, but it's an incredibly disruptive environment, to say the least. It is, at times scary, at times very alienating, and it's certainly not, what I as a parent signed up for, I must say. And unfortunately, there was no way I could prepare my daughter for the environment that she is learning in. I mean, she's essentially, learning in an environment where she's under the constant threat or constant, war of words whenever she walks outside the classroom and even sometimes inside the classroom. And it's just, it's an awful, awful thing. It went from, day to night at a lot of these university campuses. And, it's a terrible thing to see in the United States. This is not an environment that any of us thought would ever come to pass.
Well, our thoughts are with her, obviously, and hopefully that she stays safe and it makes it through finals. David, thank you so much for being here. We appreciate it.
Thank you, Cheryl.